Okay, welcome, penny stock billionaires. Exciting day in the market. Stocks are up. The moon stocks are mooning, and we're going to be talking about some of the action charts. Today's action charts: Faraday Future, Palantir, BBBY, BBBY, Bed Bath Beyond, Roblox, ARK, NexCF, AIMLF. Okay, let's get into the chart action today. Just the market still, the overall indexes are still kind of in a downtrend, but what we're starting to see now is the green shoots. We're starting to see a lot of stocks breaking out above the 50-day moving average. We're starting to see kind of some inverse head and shoulders bottoms in some of the tech stocks. And I think what makes it very interesting is that some of the stocks that we're seeing these bottoms in are the same exact ones that 12 months, 18 months ago, February of 2021, started peaking and started crashing. Those now look like they're bottoming out. So I'm going to go into those charts in just a second. I'm going to make a quick correction in here. Let me just correct this BBBY thing over here. Okay, yes, early today, the moon market is back. Look, it's darkest before dawn. I think we're starting to see the early green shoots starting to emerge right now, and they're going to come out slowly over the next probably couple of weeks. Indexes are probably going to keep going down, maybe into October, I would say probably for another few months more to go. But look, we're gonna find out really what's happening very shortly. Okay, so let me get out of this. Let me go into the first chart we're going to be looking at is Faraday. By the way, let me just run a quick disclaimer here. These are all, well, high risk stocks, obviously. The penny stocks we're going to talk about are client companies, so that should be considered paid content. Disclaimers below. Join our Telegram, join our Discord, all that stuff. Links in the video description below. With that out of the way, make sure you press the like, subscribe button, and let's get into the chart action. Faraday. Interesting chart. Look, this thing is still technically in a downtrend. We have broken out above the 50-day moving average. Very good volume last couple of days. I'm not convinced about this thing. I know this thing is getting a lot of action. We're starting to see this thing kind of lose momentum in a way. If you look at this kind of chart, it's one of these things. It's almost like the Wile E. Coyote. It's going off the cliff. The legs are still spinning before it drops down. I'm not saying this thing is going to crash. It just this is a very unstable chart. I mean, proceed with caution. Proceed with caution. I don't. I've looked at their earnings calls. I don't get this thing. I don't get what they're doing. I would say, look, proceed with caution. It's not. I mean, this thing might be a. This thing might be a trap. I would say it's very. I would say it's 70% probability that this thing is a trap. I just don't. I'm not a believer in this thing. I'm not a believer. So proceed with caution. I'm bringing it up because, look, people are watching this stock today. I think you want to be very, very careful. Don't jump into this thing. Speaking of other dog shit stocks, not Beyond. Oh, actually, Beyond Meat. It is a dog shit stock, but look at this. It's breaking out above the moving average. I mentioned this a couple days ago, and here we are. We're continuing to break out above the moving average, the 50 moving average. And we got kind of a nice little bottoming formation. It looks like a nice double bottom extending from June to now, maybe an inverse head and shoulders bottom, whatever you want to call it. Look, the charts don't lie. It looks like it wants to go higher. I mean, this, by contrast, is a stable chart. And this thing, is this a double bottom? We don't have enough data yet on this chart to really say it's a big, but I think we may have bottomed in this thing. So we may see a run. Potentially next level of resistance is kind of in this $100 range. Really not. I mean, that's the main resistance, probably, 50 range a little bit, but really, so this thing could pop. I mean, it could pop to $100. I don't really understand what they do. I'm not a fan of it, but whatever. Let's get into DraftKings, a stock I do like. And looks like we're about to break out of this 50-day moving average. It's been kind of, it has been flirting with this 50-day moving average line over the last couple of weeks. And here, I think if we break out, this could make a nice run. We got another inverse head and shoulders type of thing happening. Here, we do have enough data. As you can see, this could be a significant double bottom going back for over a year. So again, I own a couple of shares, so I'm a little bit biased. I might be getting high on my own supply here. Another one is Palantir. Look at this. This stock is starting to look better every day. It's starting to look better every day. To be quite honest, I don't know what they do. I have no idea. I know they do some sort of AI, whatever. It's who knows. Maybe it's a scam. I have no idea. The chart is saying that this thing is in bull mode. We're breaking out above the 50-day moving average. You have this kind of inverse head and shoulders. Let's draw some trend lines here. Let's draw some trend lines. This is interesting. So let's draw some trend lines. There's a couple lines going on here. This is, there's a couple things. I would say this is the main. Yeah, this is kind of one. So we're above this one, right? We're broken out above this trend line, but we got some resistance coming up kind of in this, $13 range, I would say, like right in this kind of area here, $12.50, $13. If we can manage to break out of this 12.5, 13, this thing might have a nice run. I mean, this thing might have a very nice run. It's kind of actually a very nice one. We could pop to $30. Maybe this could be the bottom. Who knows? Again, not enough data on this chart. It's kind of, I like stocks which have, at least a year in them or more. Now let's talk about some of our penny stocks. These are high torque stocks. Why do I like penny stocks? Because they could move a lot faster and, this is a lot more action in them. So let's take a look at NexCF, NEXCF. Again, one of our client companies, which, we're looking for stocks which have 10x to 100x potential. That's what we're looking for in our next super stock program. We have had 9 stocks that are up between 1,000 and 5,000% in the last 24 months. We had a whole bunch of other massive winners. And I was just in an interview today, I just mentioned, we've had on the Wall Street Reporter program, we've had 100 baggers come out of Wall Street Reporter over the years. I'm not taking credit for those because we weren't really doing big promotion. It was just like an interview thing. They did a little small thing like, Taser was one of them that became, I think, a 200 bagger. MicroStrategy was a client back in the late 90s. So we've had, that was a 100 bagger. But again, I'm not taking credit for those because we weren't really we just did a very minor thing with those guys. But the point of that is the wallstreetreporter.com, like this channel, Wall Street Reporter 1843 YouTube, is, where you can find, stocks which have massive potential. Many massive winners have come out of that site. The link is in the video description below. What is going on with NextX? So what you can see happening here is pretty clear. It looks like, again, inverse head and shoulders bottom. This chart, you can see there's a lot more trading action, a lot more activity in terms of this thing looks higher conviction than the Palantir, the DraftKings chart. It's broken out of that 50-day moving average with a little more momentum. You can see bigger swings in the day. If you're like a low-life degenerate day trader, you might want to day trade this thing. This thing definitely showing decent swings. I'm not into that type of thing, but if you are, I wouldn't blame you. So take a look at this. You got this kind of inverse head and shoulders who've bounced above the 50 moving average. And take a look at this. Very important. Big gap between the 50 moving average and the trading action over the last week. What does that tell you? It tells you this thing is got some momentum. It's not using it as a crutch. It's not using that 50-day moving average. I mean, it's really bouncing with conviction off that line. We have a pennant happening here, pennant formation, and it needs to break out of this. So really, we're looking at about 60 cents, 60 cents US, I would say. It needs to break out of this kind of 60. Let me look at the 4-hour chart. Wow, look at this. Really nice. Beautiful action. If we can close, I would say, look, 65 cents. 65 cents, if we can get into the 65-cent range, that would be a breakout of this kind of pennant happening here on the 4-hour chart. And that thing could send the stock, significantly higher. The next level of resistance is, you got psychological resistance at the dollar number. That's kind of where your psychological, actually 70 cents, a little bit of action at 70 cents, some resistance here. Next level of resistance really is a dollar. I don't see the 70-cent level as anything significant. $1 is a little more resistance. Let's back into this over here. Yeah. So this thing is looking very good. And again, one thing I've said about NextTech is, when it comes to microcap stocks, the CEO quality is extremely, extremely important. When you have a stock like, Ford, GM, Microsoft, whatever, those are massive. It's like a giant ship, like an aircraft carrier. The CEO is not that. I mean, yeah, sure, it provides the vision, leadership, etc., whatever. But you know what? Not much of a difference. They have deep management benches, strong organizations. When it comes to penny stocks, these are entrepreneurial companies. These are small operations, and you need a great quality CEO, somebody who's thinks big and has what it takes to make a stock potentially a 10x, 100x, or more, right? Extremely important. The CEO of NextTech, Evan Gappelberg, I think is one of the best CEOs in the microcap space today. I mean, look, there's a track record in place. The guy's done it before. So that's actually two companies. The first one, which was, I think was called Future Farm, and NextTech was a spin out of that. And now I think that one was up 40x. That was, I wasn't involved at that time, so it's a little bit before my time, but that was a 40x. I mean, the guy has a massive track record. And now NextTech, again, NextTech ran up 15x after we introduced it almost 2 years ago. It's pulled back. You're getting in kind of at the ground floor again. And interestingly, they're going to be doing a spin out of their AR mapping business. So potentially this could be kind of like a NextTech movie playing all over again, because we saw what happened with NextTech originally was a spin out of another company, and now NextTech is spinning out another company. So it's kind of like, I mean, it's a beautiful cycle, right? So and it looks like they may have more potential spin outs. So this could be, as they refer to it, as a unicorn farm. So they got a lot of unicorn eggs hatching, baby unicorns could be popping out very, very soon. So it'd be very exciting to watch. But again, good quality CEO. How do you know? Look, the most important thing when it comes to stocks, when it comes to this, is a CEO that gets it when it comes to maximizing shareholder value. In the microcap space, a lot of these guys don't get it. Case in point today, a former client, Visibility Group, VSBGF is a symbol in the US, VSBY in Canada. They announce a financing today, the stock drops 25%. Why? I mean, why are they doing a financing in July, in the middle of the summer? without any market support. I mean, this is the dumbest thing ever. I mean, they could have done this in January at $1. They could have done this in December at $1.50, at $2. Why did they wait so long? I mean, don't they have somebody in-house? Don't the board of directors know, hey, here's the cash flow situation. Here's what we're going to need to do. They could have raised plenty of money. There was plenty of liquidity now in the summer. Who raises money in the summer, especially in Canada? I mean, this is a Canadian company, right? So I think this is a company with their board of directors derelict in their duty, absolutely derelict. It's an absolute disgrace. There could be, maybe there's self-dealing going on. I don't know. It's a very, very suspicious transaction, if you ask me. By contrast, NEXCF has always raised money at the right time. When there's, when there's market support, they've raised money back over $1 back in January when the market was still halfway decent. They've raised money at, what is it, 7? I mean, they've raised money at high prices. So this is not, that goes to show you, CEOs who get it, financing is a very important thing. So let's get into our next thing. So NEXCF looking very good. I gave you the big picture there. And this is a Web 3.0 company, right? Speaking of Web 3.0, let's look at RBLX. So RBLX. This is a really strong chart right now. We're breaking out above the moving average. Very nice action here. I think this thing looks like it's ready to break out. If this thing pops above this flag that's kind of happening in this $39, $40 range, closes above 42, we could see a nice run. Next level of resistance is in this kind of $50 range. So if you're a low life day trader, you can grab a quick $10 over here. Very, very compelling, I would say. Let's take a look. What else do we have? Yeah, so RBLX looking very good. This chart is strong. I mean, look at this. This is a 4-hour chart. We got either it's an inverse head and shoulders, double bottom, whatever you want to call it, but you can see it's clearly, and this is clearly above that 50-day moving average line. Actually, this is, quite frankly, very similar to NEXCF, but this is a little stronger because you see a bigger gap where it's, really going way past that 50 moving average line. So, and this is, again, a leader in the sector, very different than NEXCF. I mean, they're not in the same space. How about Matterport? Kind of a Web3 metaverse stock, also breaking out above the 50-day moving average. This is the 4-hour chart. 1 day. Let's take a look. Ignore those trend lines. That's from something else. We're not above the 50 on the daily chart. So you got to keep your eye on this one. Keep your eye. Oh, excuse me. Sorry about that. Let me go back to RBLX. Sorry, I had the thing up there. Yeah, so here's what I want to show you. If you can see this, you can clearly see a pennant happening here. This is the 1-day chart. We're above that 50-day moving average. Clear, really nice gap between where the stock is now and the moving average. It's cleared by a very healthy margin. So this thing wants to go up. I mean, you're seeing clearly the momentum. That's the RBLX chart. So this thing is looking very good. What else should we be looking at? How about ARK? Oh, I'm sorry. Let's look at NEO. NEO, again, I don't really care for the company, but charts don't lie. This thing is very strong. Again, above the 50 moving average line. And this thing broke out. When did it break out? It attempted in June. It really did it again June 15th. And it's, confirmation over here. So this thing is, this thing wants to go higher. You got a, let me draw you the correct moving average. That's your correct trend lines. Pretty much that's it. So those are your trend lines. you're going to have some significant resistance in this $23 range. If NEO manages to break out of $23, the next level of resistance is kind of in this 30 range and 40 range. But I think it's going to have, let's see if it can break out of this 22. I'm sorry, it's really 24. Let's call it 25 bucks. $24.50, $25. It's got to break out of $24.50, $25 to run. And again, when NEO runs, that's going to pull up a lot of other disruptive innovation stocks with it. Speaking of disruptive innovation, ARK, what's going on? Does ARK not want to show up? Oh, look at this. Oh my God. OMG. OMG. Let me clear this drawings over here. ARK is breaking out above the 50-day moving average. Clear. Today is it's a confirmation of the breakout. Inverse head and shoulders bottom. I mean, I gotta know what to tell you. This thing looks like it may have bottomed out, and we do have, it does look like a double bottom. It looks like a double bottom, but between now and March of 20, which was and also shit, I don't know, going back, whatever. Could it be that ARK has bottomed? I mean, the chart is telling you something's happening. Again, you know what? When it's above the 50 moving average, you want to be long. When it's below, you want to be short or out of a stock. That's kind of my rule of thumb. And if you look on ARK, that system has worked for this chart. As much as you want to hate the stock or whatever, you don't want to, the charts don't lie. So I mean, I'm thinking maybe I should buy some here. Upstart, Upstart, I think I traded that. Upstart, yeah, let me see what that's doing. I'm curious to see what that's doing. Yeah, man, this thing is, I mean, man, I remember it was kind of starting to look good way back. I don't know, when was it? Back in, I think, yeah, back in February. It looked like it had some good news. It had that breakout above the 50 moving average. And it gapped up, and man, this thing's just falling apart. I mean, I hate to tell you, this chart looks like crap right now. This thing does not look good. Yeah, this thing is not looking good. Yeah, I don't like this at all, man. Sorry to give you the bad news, unless you're short. SoFi on the verge of breaking out. We're still below the moving average, but look, there's a common theme. You guys get it, right? There's a common theme. It looks like tech stocks are bottoming. I would say ARK might be, I'm going to make a note here for myself. I mean, you might want to kind of hold your nose. I know it stinks, but you might want to hold your nose and buy, because it's above the moving average, unless it's a fake out. And I just don't think it is. It doesn't look like it. Really, it's just doesn't feel that way, What other stocks? Oh, Affirm. Look at the other. That's kind of a weird company. Oh, there you go. That one also looks like it wants to go higher. Shit. I mean, you know what? We might have seen the bottom in the disruptive innovation sector. So I would say now is the time you want to get into tech stocks. How's Chevron doing? Chevron, it looks like it might have peaked out. Yeah, so you know what? It could be, the oil stocks may have had their day. I mean, yeah, they've had the Oxy. Interesting. Oxy's holding on. Oxy's looking pretty good. The tech stocks may have had their day. Excuse me, the oil stocks. I mean, we could be seeing another turning in the market. This might be the tech bottom. We're going to know in a couple of weeks if I'm right or wrong. We could be seeing, you know what? I haven't done anything with Logic. I actually looked at their chart just a while back. I mean, we haven't done any work with them in 10 months, I think. I mean, long time. I don't know, man. I don't know what's going on there. Yeah, so we haven't done anything with these guys. Oh, this thing this thing looks terrible. Yeah, this chart is not looking good. Look, they stopped promoting the story. It was just, that's what happens. That's what happens when they stop promoting the story. Yeah, these stocks, they need market support. That's the reality that CEOs need to understand. Look, here's the thing. If you have the only time a company doesn't need to do stock promotion is when you have real earnings, when you have metrics, big revenues, big earnings that show up in databases, and so that shows up on searches, right? It's like Google search, right? So like analysts, money managers, that way they can find your stock and they could discover you, right? In other words, if any company that has a dividend will automatically show up on all these searches of dividend stocks. So it's kind of a gimmick. Companies sometimes do a dividend that way, show up in these searches, and that drives, audiences to that stock. And it's a smart thing, right? It's a smart thing. By the way, AIML breaking out, big, huge breakout right now as we speak. Wow. I'm going to pull this thing up in just a little bit. This could be very, very interesting. But yeah, but when it comes to microcap stocks, they need to promote their story. Why? Because they don't have big revenues. They don't have earnings. They have nothing. They have no fundamentals that really show up on these searches, on database searches, right? They have no advocates. They don't have, analysts at Goldman Sachs, at, investment banking firms pushing their stock. And by the way, the analysts at some of these small cap firms, whether it's, these bullshit Canadian firms like Canaccord, Echelon, or in the US, what do you call it? HC Wainwright, Roth Capital, and the microcaps, those guys don't count. That's, look, when it comes to the big firms, everybody knows kind of that these analysts are basically doing it because they're trying to get investment banking business. Everybody knows what the game is, right? It's a rigged game for the most part. Sell-side research is basically a scam, right? But the difference is, people they do it because they do it for the CEO access, right? So like, if you're a money manager, you're running a couple $1 billion, you'll take a call from the analyst, at whatever, Goldman Sachs, whatever, some other mid-sized firm, because, that guy is going to bring the CEO of the company around. They're going to bring him around for meetings. You're going to be invited to the conferences. You're going to have access to the CEO. So that's really the value of the analyst. It's they're a pimp for CEOs, right? They're like a CEO pimp. So corporate access is very important. Why is it so important for these money managers? Because they want to get insider information. I mean, legally get insider information. Look, I talk about it in some of our stuff. The value of the CEO interviews that we do with Wall Street Reporter. I mean, the reason I got into this business in the first place is you're never going to get better information than from a CEO interview, because by listening to how they respond to questions, not so much what they say, but how they say it, the inflection in the tonality, voice tonality, body language, when they say certain things, that can give you a lot of valuable cues into what's really happening, if they're being honest, et cetera, et cetera. So if you watch our interviews, you can kind of get a sense for that, right? So how did I get distracted? Oh yeah. I'm sorry. I'm sorry. I went off on a little bit of a rant. Yeah, but the point is, the microcaps, they need to have promotion in place, because otherwise nobody's going to be talking about their stock. They got to have somebody. They got to have, whether it's Wall Street Reporter or somebody else, but look, I'm kind of the best at this. I mean, I know it doesn't look like it, but yeah. Okay, AIML, one of our big winners today. Look at this. It's in play. It is in play, up 22%. I mean, only 3 cents, but yeah, it's moving, right? Look at this. Let's look at the American chart because America is where it's at. Nice action in the stock. Look at this big volume today. What are we at? We're at 100,000 shares. Not bad, not bad. I mean, I know it's only like 15 grand, but hey, it's July 7th. We're in the middle of the summer. Everybody's playing golf. They're at the pool. They're at the beach. I don't know, whatever they're doing. But you can see, here's what's interesting. Look at this chart. The volume has started to accumulate starting in June. All of a sudden, look at this. I wonder why. All of a sudden, since June, this thing has been, consistently trading more in the U.S. So the Americans have been buying. The stock has been above that 50-day moving average. Today, we're clearly above it. And it's starting to move up. I don't know, man. The charts don't lie. And what's interesting about AIMLF for all the Americans is this thing it's got like a weird little cult following. It's got a small base. You're welcome. It's got a small base of investors, but they are very kind of, loyal, dedicated followers. So I think if this thing manages to catch a bid, we could see some action. We could see some action in AIMLF. Look, I can't, because the Canadian stock, I'm not giving any investment advice at all here. But I can't tell you, okay, so again, I can't tell you where I think this thing is going. I can tell you where some resistance is. The Canadian regulations don't allow any discussion of price targets. So I'm not going to give you a price target. I can tell you where the resistance and support lines are, and you can decide for yourself what's going on. So we've broken out above the 50-day moving average, right? So that's a key resistance line. The next level of resistance is kind of in this 50-cent range. Maybe a little bit, 25 cents, maybe a little bit kind of, I don't think so really, but really 50 cents is kind of your next level of resistance. This company's got a lot of catalysts in place, so who knows where this can go. But we've clearly seen the support. I mean, it's bounced off the support here in this 12, 14 cent range. So again, what do? I have no idea what they do. No, I'm kidding. They're in the health tech business. AI, machine learning for wearable devices. They have a very broad patent, which we talked about on a past interview. Companies are starting to license that patent. How big is the wearables market? I think, is it 50 billion? It's a huge number. And look it up. I think Grandview Research, the wearables market, I believe, is 50 billion. Health wearable. They have a very broad patent for monitoring health on wearable devices. What does that mean? It means that, if you're like you've got a device that monitors pulse or whatever it is, you might be infringing on their patent. That means you're going to have to pay royalties. So, which is, could be significant money. This could be, and this thing is a market cap is like $5 million. That's what I like about it. Show me a stock with a market cap under $10 million. And, to me, that's exciting because I'm looking at this as you're buying a piece of a business, you're making a bet, $5 million. Neuron, I'm expecting them to come back onto a platform, I don't know, soon. I don't know, sometime soon. ESC Entertainment turned out to be a dud. I mean, look, this guy is another guy. He's like a J at the Visibility Group. It's a stock that they were nowhere. Nobody knew they existed until they got onto Wall Street Reporter. Then it went from 30 cents to $4.50 within 6 months, right? They raised a bunch of money, and then they stopped promoting. Last summer, the stock went down, volume dried up. Then they restarted. Volume picked up. Stock started moving back up. Then they stopped the promotion. Why? You know why? I don't know. Because the guy's a moron, right? I mean, it's like Jay. I mean, look, you've seen the interviews. With these CEOs, you don't know. A lot of times you don't know until you actually see them in action. Everybody talks a great game. Oh yeah, I'm all about shareholder value. You're gonna be blah 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 blah. I'm gonna do all these great things. You got to watch these guys, see them actually. Deeds count more than words, right? Action speaks more than words. And this guy's turned out basically to be a dud. I mean, they did deliver on the revenues. They showed revenues, right? They had some impressive revenues. The problem is that was already discounted in the price by the time they announced it. Everybody was waiting for it. And I believe that if they were doing promotion, if they were doing live streams, talking about new stories, then there would have been other things to look forward to, and the stock would be, still trading at $1.50, $2. They didn't do that. Why? Because I guess the guy is a genius. They're all geniuses. So, that's the way it is. I mean, I could show you a chart. I mean, look at, this is so stupid with some of these companies. And you know what? Everybody gets angry at me. Shareholders get angry at me. Oh, you're bashing the company. You're bashing the company. I'm not bashing these companies. I own shares in some of these companies from option exercise or whatever. My interests are aligned with shareholder interests. Okay, I'm interested in seeing stocks go up. All right, but I gotta call it out when I'm not gonna tell you that somebody's doing a great job when they're obviously doing something incredibly stupid. Take a look at this. I'll show you. Look at their volume. I mean, why did their volume? Look at this. Here's the volume chart, right? I mean, you can see what's going on. Why did the volume all of a sudden dry up starting in March? I mean, look, it was going, 100,000 shares a day, whatever. And now we're trading, 6,000, 20,000 shares a day. And by the way, this is the Canadian chart, the US chart. Forget about it, right? What happened after March? What happened? I'll give you a hint. What happened? They stopped promoting the stock. Yeah, look at this. The US dried up. And what happened? Volume dried up. Stock is going down. It doesn't take rocket science to know that you need to promote a stock, if you want to get investors' attention. Hey, there you go. Also, Origin. Actually, look, there's a whole another story. But yeah, we haven't worked with Origin OG since like really late April official. I mean, really officially last month. But it basically, that's a whole nother clusterfuck over there. But look at their chart. Look at their volume. Once you stop, once you turn off the promotion, the volume dries up. I'll put it this way. With Wall Street Reporter, you can clearly see night and day volume. Some of these other, like, IR companies, whatever it is, you see no difference because they never produce results in the first place. So you never see you never see anything happen on the chart unless we're also working with them. So it's like, whether it's like a Greasy George at Agora or, any of these other deadbeats, I don't know, who's the other guy who thinks he's what the fuck is his name? Equity Guru, other losers. Look, it's very clear. Wall Street Reporter delivers volume. When Wall Street Reporter is involved, you see volume trading stock activity. Why? I don't know. Maybe magic. Maybe we're magicians. It's very consistent. Very consistent. Look at the volumes on our clients versus other people out there, which is quite frankly one of the reasons why stocks run up as soon as companies announce hiring Wall Street Reporter, because investors know what's going to happen. They know that we get involved at that inflection point where great things can start happening, and there's going to be eyeballs on the stock. I mean, stocks need eyeballs. The more investors are looking at a stock, the more potential demand there is for that stock, right? So if a company's putting out great news and nobody's watching it, it's not going to go up. That's why, but if we build up a massive audience for a stock, then that creates a fertile environment. So when they do have good news, you have people who are watching it that can take action. That's the secret of this whole business. I'm revealing secrets of the trade, soon to be published in my upcoming book. But anyway, let's talk about positive things. I know everybody likes positivity, and I want to be all about positivity. I don't want to be bad mouthing anybody. I want to be all positive. AIML, beautiful chart formation. I mean, you got to decide for yourself. I can't tell you where this thing is going. I mean, I would, but the Canadian regulations are censoring me. They're banning me from telling you. There's a lot of banning and censorship going on. We were just banned. The penny stock billionaire gang account, was banned from Twitter recently. Why? Because we put out we reposted a link from an article from the Daily Mail, a respected, London newspaper, about Joe Biden's daughter. Basically, Joe Biden, we know he's a lowlife. Listen, you can tell if you look at the children, you can basically see the parents, right? The fruit does not fall far from the tree. The apple does not fall far from the tree. Look at this guy, Hunter Biden. We know he's a drug addict, a degenerate, and probably involved in, obviously he's corrupt in the corruption thing with China, selling access to the president, the vice president when he was a thing. And now we find out that Joe Biden's daughter is basically a prostitute and a drug addict, right? I mean, Daily Mail, look it up. I forgot her name. I think it's Ashley Biden or something. So, I mean, the whole family is screwed up. I think he may have been molesting her. The article, we're not saying that Joe Biden is a child molester, but if you read that article, there was some weird things happening, with Joe Biden and his daughter. She says that they took showers together when she was, a little older than probably 1 year old. I don't know, but it's some weird stuff. So anyway, so Twitter has banned us. They've banned the illustrious penny stock billionaire gang account from Twitter. So you know what, Said, I think you're right. I'm going to stick to only talking about stocks. It's because look, you're always going to offend half the audience. I don't want to offend half the audience. Or maybe I do. I don't really care. Anyway, so let's look at the action in the stocks. Let's talk about making money. We're at 401. The market is closed. We're at the closing bell. AIML, very nice day today. NextTech, also nice day. Look, things look like they're bottoming out. We've had some false alarms before. In some of these stocks, but I think this is it. If you kind of look, the volume, things happening, it's always, you got to buy stocks when they're at the ugliest. You got to buy them when there's fear in the market, when you're afraid to buy it. That's, again, I'm not giving any advice, but that's kind of the market psychology. It's always when things look ugly. Let's take a look at Trip. What is going on there? I don't know what's going on. This thing is disaster. Another guy, another disaster artist. What other stocks should we cover here? I think we've pretty much covered. Let's do a quick thing on ARK, and I will sign off. How did ARK? This is a delayed chart, but very nice. ARK, what can I tell you? These charts, they don't lie. Okay, anyway, thank you for tuning in. I'll be back at some point soon with more chart chat. Make sure you click the like, subscribe button. Oh man, Trip is way below that moving average. I don't know what's going on with those guys. It's interesting. Peak FinTech, PKK. We're getting close to kind of the original entry point. So I think we got involved at was it 35 cents? Yeah, 35 cents. So that would be the equivalent of 70 cents after the split. So I think, look, this thing is kind of still in free fall. I mean, we're way below the moving average. There's really no sign of a bottom yet. I mean, you're going to have support coming in at 80 cents, which is kind of where we were. So 40 cents, basically 80 cents is your support. I think it's probably going to go there. Based on this chart, there's really not a lot holding it up. You know, it's look, it's these guys. You know, look, it's China, fintech, et cetera, et cetera. You know, the story's gotten beaten up. I think we might see a bottom in kind of this 80-cent range. Let's see what happens. But with that said, I did tell you guys back when the stock was 12 bucks on its way to 14 that, hey, looks like it's going higher, but, you know, you get ready to, you know, start taking profits. And I did tell you when, you know, when we were done with this thing, that, you know, there were more risks, more things, you know, there's things out there that could go bad, right? You got the China story was starting to get sour. The market, everything was priced to perfection. When something is priced to perfection, it can only go down from there, right? So I'm not saying it's going to go down, but when a stock is priced to perfection, there's no more upside left, right? You know, stocks can only go up when they're ugly, when there's still things to happen. So, you know, stocks like AIML, NexCF, these things are, I mean, some of our others right now, they're cheap because the market doesn't believe the story, obviously, right? There's not enough believers. When there are too many believers and the stocks, let's say the stocks explode, all of a sudden everybody's saying, hey, it's going to the moon, it's going to the moon. That's when you want to get out. So anyway, on that note, thank you for joining. Press the like, subscribe button, and I will see you on the next live stream.